Hey, good day, everybody. This is Dennis Wilbur, and I want to welcome you to this special edition of How to Make Money Trading Stocks. This is usually a live webinar that we do every Friday. However, this is Easter weekend, and so the market on Friday was closed, and so I just hope and pray that you and yours are safe this weekend and are taking some time to just basically appreciate life and also be very, very thankful for the life we do have. If this is the first time you've joined us on our Market Tech Talk YouTube channel, please, and let me see if I can get this correctly, please go down over here. There's a little subscribe button. Hit the subscribe button and the bell, and it'll get you set up to get notifications of content that we post in the future. Hang around till the end of the video because I'm going to be showing you how to get connected up so that you get the best watch list every weekend that's available on the internet. And it's from the strongest premium watch list, the IBD 13 watch list that they put out every week. And so basically I do sorting and I do some analysis and I come up with typically the best, anywhere from 10 to 18 new stocks every weekend. So as we get ready to get into today's session, I just want to basically say thank you so much for being an active trend trading member. And please join us. Please join us for either the free service and or the premium service or even the top 5 service. We'll talk about that a little bit later, but hang out to the end of the session so we'll get into that. Hey, remember, it's almost like I want to do a social media fast right now to kind of get out of this because, dadgummit, there sure are a lot of critics out there who are second guessing what's going on and that kind of stuff. Those Monday morning quarterbacks that don't know their butt from a hole in the ground about what they're talking about. All they want to do is cause trouble and stir the pot. So don't listen to the pot stirrers. And so remember, it's not the critic who counts. It's not the man who points out how the strong man stumbles. So remember, all we do is for trading purposes. Traders should always trade or paper trade any new method prior to the risk of their own personal capital. So where are we at? One of the reasons why we do this session every weekend is because I want to provide traders with top-notch market analysis every week. Timely and actionable intel that clarifies and simplifies trading decisions and processes so traders can multiply profits and minimize their risk. I want you to come into the market where you can not just survive, but thrive in any kind of market. So what's my basic market analysis for this weekend? Is basically, have we hit a bottom? I get that a lot. We are definitely getting a bounce that's heading back up towards a reversion to the mean. Some of the indexes are hitting a higher mean, like as in the 50-day moving average. Some of them the lower, as in with the Russell. However, the other question is, the virus attack has impacted economies around the world. Is the market flashing signs that the threat is receding? That's a really good question. Oftentimes we'll see the clues will start showing up in the market about which direction it's going to go, sometimes weeks or even months before the actual recovery. I mean, we have to admit that this, hammering of both the U.S. and the world economy due to the virus attack came out of kind of nowhere. However, the market was primed to basically fall because it was quite overvalued, and people have been talking about that for a long time. So that's kind of where we're at. We still want to be very, very careful. Index presenting fast turns and wide ranges, same. And so adjust your expectations, simplify your process. And when I say simplify your process, what I'm talking about primarily is, stay mostly in cash. With active trend trading system, we moved to cash back at the last part of February. We avoided 85% of the downturn, and we're sitting heavy in cash right now. We're waiting for this bottom to solidify and show us that it is ready to go back into a significant backup into an uptrend. Hasn't happened yet. Just be aware. Stay engaged. Discipline yourself. Um, Oftentimes, people miss the move off the bottom, which offers some of the greatest buying opportunities ever. Or they come around about every 6 or 7 years when there's a bear market. But some of the greatest buying opportunities are at those points. So people miss them. Why? Because they get distracted. They lose interest. They go, oh gosh, is it ever going to be over? And just about the time they give up, throw in the towel, typically within 2 weeks of that happening, that's when you get the market rebound. While you're doing this, study past bear markets and the reversals off of those. They're each one a little bit different, but then there's also some nuggets of sameness in there that keeps the market going up. Be ready with a watch list of stocks that have held up better than the markets. And that's one of the things we provide to our free active trend trading members, and you'll have a chance to sign up for at the end of the session, is I provide what I call the Power Ranked Elite watch list. It's somewhere between 10 to 15, sometimes up to 18 stocks every weekend that have basically made the cut, first with Investor Business Daily, and then secondly, we trim and cut out all the fat and all that kind of stuff so that the best float to the top, and then those are analyzed and we progress from there. If you want to take it a step further, where you'd actually like to get the triggers on those, which we call the top 5 plus, where we provide triggers on the top 5 of those stocks that make it to the Power Ranked Elite list every week, you can become a top 5 member. Hey, as we get ready to get back into the market, remember, we don't have to just lurch and dive in. We can wade back in after the reversal days. We've had a reversal and a follow-through day according to the IBD rules, but have they triggered the entries per your rules? And they haven't quite as per the active trend trading rules. So we want to go, today we're going to take a look at index and stock performance. Got a really good stock for you. Normally Dr. Steve would join us, but since this is a special session that's recorded and not live, he won't be with us. So let's get on to getting on. Right now, the active trend trading system is up 12, almost 13% for the year. Again, we have been primarily in cash for the last 3 weeks. We've been doing a couple little cash flow trades. And we're progressing and continuing to move up. What's my target for the year? Of course, my target for the year for active trend trading every year is 40% with a 65 to 75% win-loss ratio. Right now, we're outpacing all the indexes. Note here, though, let me get my pencil out. Note that the NASDAQ, strongest of the strongest, Russell, the weakest. But Russell had some good moves last week. So now let's jump in and take a look at those charts on the Russell and the S&P. So I wanted to highlight, here's the S&P. We've got a daily chart on the right. We have a weekly chart on the left. What are we basically seeing? Price action came down and hit this 220 level and then has started to rebound. As you can see, from the high when was that? The high was on the week of 17 February to the low, which was down here on the week of the 23rd. So almost a month's worth of drop. We have received a rebound that has now hit back up here towards the 50-day moving average. Where does, or correction, the 50% retracement through the Fibonacci's. Some of the things to notice about this that we could take into consideration. Okay, we have not received a reversal signal yet. However, we are still below the 50-day moving average. Counter to that, we have the 8 and 20 starting to cross up and turn up to the upside. So how would we want to look at potentially trading this? Well, one, if we continue to push up, close above the 50% retracement, we can use that 50% retracement as a level of support. Preferably, what I'd like to see is we'd like to see a little bit of a pullback into the moving averages, maybe about the 382 level. and then a rebound that would take us on up back up to the past highs. That would be, or approach the past highs. Note, the other negative on all of this is this simple little thing here. We are below the 200-day moving average. We are below the 200-day moving average. So while we may be in a very nice rebound, we are still below the 200, and things can bounce around there and ricochet, off of those levels and start to fall. One of the things to also remember is that some of the largest positive runs happen during a bear market. So the market still, and so it makes it a little bit difficult to time your trades, but just remember that there can be some 25, 30, 40% moves all within that time frame. As we look here at the S&P, how much has it bounced? Well, from this low here up to the high, that's about a 29% run. What was its bounce to the when it dropped from these highs over here down to here? Well, that was a drop of about 35%. So again, it looks like it's reset. One of the missing ingredients that I'm noticing that's just not there yet, it doesn't seem like we've had a capitulation. Doesn't mean we can't go into a significant rally and get back up into the moving averages, but so there's let's see what transpires. Let's see if we pull back down into these areas of support and then rebound from there. What about our Qs? Q. Again, as you can see, Q's made it above. Come on. Yeah, let me get rid of some of this junk, some of these lines here. Make it a little bit easier to see. Now these lines will be important if we start getting a little bit of a retracement. But as you can see, prices on the Qs above the 200, above the 50, and right at the 50% retracement. How much of a move has it been off the bottoms for the Qs, for the NASDAQ? Well, that's been about a 23% move. Interesting, not quite as big a move as it was on the S&P. Let's take a look at the NASDAQ, just to do a real quick comparison, make sure its price action is also similar. And I do this because oftentimes, very, very similar. Price action above the, I'm looking right here and, come on. I'm looking right there at the moving average, a little bundle of moving averages. Grab my drawing tool here. Okay, I'm looking right there in that moving averages, the 50, the 200 right there, and we also have a very nice split on the 820. So when the shorter-term moving averages start to roll like this, oftentimes they work as catchers. So price action can pull back into it or around it, and then it'll rebound from there. It makes a really excellent trigger moving forward. What are other things that I'm looking for that is of interest? Well, one, my TSI on the weekly chart that we see over here has also started to turn up. My longer-term market forecast, long-term momentum has also started to reverse and turn. Now that does not mean, because if you'll look over here, that happened over here, but again, well, this is back in 2018, as you saw, it started to turn up and then it reversed back down to drop down lower. So we're at one of those points of demarcation where price action could just reverse hard off of this, come back down, set in and make a newer low, and then rebound from there. That would be actually a very excellent opportunity, because if we came down here, made a new low, but we had the positive divergence on the momentum, that is oftentimes a potential signal to go very heavy into the market at that time. So that's what we got looking for NASDAQ. And that. So let's take a look at IWM. IWM made a really nice move up on this past week. There we go. And it was kind of a gappy kind of, that sounds funny, a gappy kind of, but it gapped up, gap once there, and then gapped up here. And where have we wound up? Well, right at the 34-day moving average, but it's right here at the 3.8, depending on where you measured it from, it's the 328 or 382 extension off the fibs. That's from this high here to this low here. And so that's oftentimes where you'll start running into issues. The IWM, the Russell, still has a ways to go to get up to the 50, and has a really mighty long way to go to get back up to the 200-day moving average, really down below that. And so what can we anticipate? And here's where we can, and I'll just show you a little trick here that I like to keep in my back pocket for where might this turn around. Go to about, and I'm putting in a dollar value though, on the weekly chart, go to about midway of that big dark candle. And as you can see, there's a past high right there. So I'm going to go to, just pick a dollar sign in there, somewhere about there. That's about the midsection. Now I can roll back over here to my daily chart and say, well, where was that? And you can see that. Let me get rid of some of this stuff. I'll draw it back in later. There we go. As you can see, that is that line right there. So it's just above the 236 extension. So, and it will be right in line with the 8 and the 20. So that would be an ideal place for the IWM to come down to, stop, and then rebound. Another way we can, estimate where this might go, if this is the high, basically, and if we get a systematic or not a systematic, but a similar pullback to what we had here, we can also generate a level down here, so it would give us a target area where we could bounce back up. I'll do a presentation in the near future about how to use Fibonacci's a little better, and but at that, and I don't want to get it too complex for this particular video, but I'm looking for it pullback into this level here. That would be a great place to put an alert saying, if I get down to 117, alert me, and for a trigger up to the upside. If I did that, my stop would just be immediately below the 8-day moving average, because as you can see, the 8, the 20 are all starting to turn up. They're turning into that catching mode, and when the price action is below that and they're sloping down, it also is catching mode, but it'll hit it this way and then bounce down. If it's the moving average are starting to poke up, price action will come down to it, hit it, and then typically bounce up. If it doesn't bounce up, then watch out below, because that means there's a lot of weakness coming into the market. So that's what I've got on that. Let's see. As long as we're here, let's talk about a specific stock that is looking kind of interesting. And it is AMD, which of course is Advanced Micro Devices. Now, one of the things that I like about this particular stock is, one, it is early in its reversal. It is early in its reversal. Prices actions are all above it came down and tested the 200. It is rebounded and is back above the moving averages now. It is retesting this resistance up here at, it's just kind of textbook, as you can see here. There is, and look to your left. What do you see? Well, right here we see that, which corresponds to that level where it's slowing down and pulling back. We have the moving averages starting to, playing the catcher's role. We have 1, 2, 3 of our major moving averages right there. That's a wonderful cluster. We have earnings coming up here. So we could, in fact, get a pull back into there. Matter of fact, that's the trade I'd be looking for on this. So pull back into that cluster moving averages, clear that up, which sit at about, the midsection is about 46.39. And then where would we anticipate it going from there? Well, a potential would be move all the way back up to these past highs, or at least back up to the Keltner channel. So let me give you a target on that. If I get in at 46 and grab that, or a little bit higher. Nope, I want it at 46. Hold on just a second. Oh, you rascal. The other thing is, as you looking at this, you can see that looks in a longer term chart. It looks a little bit like a inverse head and shoulders, shoulder, head. Here, I'll draw that in for you. Shoulder, head, other shoulder, neckline kind of across here. Breaks out that neckline. It's probably going to go from 36 to 50, let's say. So that's about $13, $13 to the upside from there would be a nice move. Let's get rid of that real quick. I want to turn that off just for a second. Okay, what we've got here is a pullback in the air, and we stop and then bounce back up towards the past highs, or even the Keltner. Keltner channel would be at about a 12 to 13% move. Back to the past highs would be about a 24% move. AMD actually, it works out, pretty very nicely. It's pulled back to the moving averages and bounce, back to the moving averages and bounces. So it does have earnings coming up on okay, April 28th. So we've got a couple of weeks to work this one. So let's see if we get a little bit of a pullback in the air and a bounce. Again, that's a pullback into 46.50-ish would be where I'd put my opportunity to buy. So that's my stock for today. And let's get on and just finish things up here. Hey, I'm always seeking to clarify, simplify, so you can multiply your profits and minimize your risk. I am putting up a new training video every week on my YouTube channel. That's Market Tech Talk. If you've not gone there, please go and subscribe. If you're watching this, you're probably watching it on Market Tech Talk. You need a speaker for any of your groups, please get in touch with me. Got close to 30 years of technical analysis experience and training through the Market Technician Association. And so you need it. So that's what we can do. Next BAM webinar will be May 2nd, where we're going to talk about candlesticks and the convergence of clues. Still waiting to see when we're going to be able to start meeting again in Honolulu, and Dr. Steve will let us know about that. So one thing I just real quick mentioned earlier, Power Rank Elite, at least go in and get where you get the free watch list every week. If you want to take it a step higher, get the Power Rank Elite Top 5, and in that I highlight 5 stocks, and I tell you exactly where I'm planning to enter and exit and how I'm going to do the trade right here in this go, no-go table, and I also provide you a video every weekend that also shows you how to do that. And normally the monthly value of this is about $260 at least. Normally we'd charge $79.99 for this, but you get it for $19.99. As long as you stay a member, you'll get it for $19.99. Or you can sign up for the weekly aspect on it also. And you go there, and that's where you get signed up. And it'll also be a link down in the description on this video on YouTube that shows you how to do that also. So until next time, we'll be getting back into the normal swing of things. So aloha, trade well, prosper, have a great weekend. Happy Easter, everybody. Mahalo, and God bless. And so if you're interested in more, there'll be a little icon that'll drop into here to sign up for the watch list, and then also hang around and watch the next video that's coming up. Aloha. God bless.